Good morning. It is Friday, June the 12th. Here's what's on the agenda. SpaceX predicted to surge at the open on its history-making $75 billion IPO. Trump halts attacks on Iran and again claims a deal is close. Oil drops and stocks rally hard.
OK, let's talk about that oil drop. We're down by circa 2% on Brent right now. We're sub 90. That's the trade right now. Stocks, as Tom says, they are a rocket ship today. The Cosby is off its earlier highs. As you can see, we're still up by nearly 5%. We were up 8% earlier on in the session. And Eurostoxx 50 futures right now up by 1.6%. OK, pre-flight checks are complete. The countdown to the opening trade starts right now.
4, 3, 2, 1, ignition. And liftoff. Go SpaceX, go Starlink.
Welcome to the programme, everybody. Friday the 12th. Happy SpaceX Day. Perhaps that's what it should go down as. It's a seemingly small step for many companies, or at least from a macro perspective, when you take a company to market, when you do an IPO. But this feels much more like a giant leap. But which of the giant leaps are we most interested in today? Is it the giant leap in retail interest? Is it the giant leap from a scientific perspective and the AI journey that we're on, which sounds pretty exciting? Is it the giant leap expected in Elon Musk's personal fortune? Because that's certainly worth discussing. A giant leap in a new direction on governance? Or do we think investors are taking a giant leap of faith when they get behind the untested science that goes behind this valuation? And you can pick all of them. Yeah, tick all.
Tick all.
A $28.5 trillion total addressable market, which is about the size of the entire US economy. The bull case is that they dominate in terms of their launches, they dominate in terms of Starlink, and they build data centres in space. The bear case, of course, is that there's a regulatory challenge here, is that there's physics involved in terms of getting those data centres in space. Bottom line is, this is a massive market moment, huge amounts of capital returned to employees and early investors, and venture capital world as well, being given significant liquidity that then is going to be churned into the broader tech ecosystem. So that's on the tech side as well. Massive returns coming
through.
And
other market impacts of this going to be amplified by all of the ETFs that have suddenly been set up to take advantage of this moment, because not everybody can get involved in the SpaceX IPO. But we now have more than 20 SpaceX listed ETFs filed. Some of them are leveraged, 2 times leverage on some of them, 2 times the daily move. Some of them are reverse funds, so they take the opposite of whatever the SpaceX trade is doing. But this is set to amplify whatever the moves are on day one, and however rich that makes Elon Musk, whether that makes him a trillionaire, the world's first trillionaire.
Could be a trillionaire, out of this world number. What is also interesting is that we are seeing an end of an era in some ways. The US equity market has shrunk dramatically over the last few years. Buybacks, all these kinds of stories have driven that narrative. We're now getting an expansion in the amount of equity that is out there. And that is, I think, quite a significant moment. Are we about to see a pivot there? And what does that mean? How much has the multiple story been driven by that narrative of buybacks and a shrinking market? We're about to see that tested as well, because SpaceX isn't the only one.
Yeah, there's CapEx all over the place.
There's CapEx all over the place, there's IPOs all over the place, and big IPOs all over the place as well. Is that what is driving markets this morning? Actually, probably no. It will drive markets later on, and we are pre-positioned for that SpaceX IPO, obviously, to be a big story later on. But overnight, the news has been on oil. Brent is sub 90. We are moving lower. We are down by circa 2%. We're off our earlier lows, but we're in a position now where we have to once again question whether or not we are going to get a deal, as the president suggests. The indications are from Axios, and this is based on, I think, an unnamed US official and a diplomat, so let's kind of just have a quick look at that kind of sourcing story. But basically, a 60-day extension. We've heard this story before. You are going to get a Strait of Hormuz opened immediately. Apparently, you're going to get some sort of sanction story for Iran that is going to work. I feel like I've been here before.
There's also reporting that C-17 planes are on their way to Europe for a potential signing ceremony in Geneva. That suggests that maybe there's a bit more work that's been done in terms of the negotiations. But we have seen this story before. We've seen it on Fridays. We've seen it leading up to the weekends. We've seen it being reported by Axios. The Vice President, if things move forward, as they've suggested, could be there in Europe next week signing this memorandum of understanding. The hard stuff is going to be left for after that 60-day period. That's when the negotiations around the nuclear component apparently come in. And of course, for the markets, the key part is the Strait of Hormuz reopening, which should, according to the MOU, start to happen within that 60 days.
And that will be important. And what kind of downdraft in oil prices is there still to be seen if we do get that signing? But how quickly do we then pivot to a conversation that says, even if we get this, which is, to your point, not guaranteed, but even if we get this, how quickly do we get there and say, well, hang on, this is just 60 days, and there are so many things still left to be discussed?
Across the wider markets, so oil is clearly a factor, and we continue to tie in what's happening in terms of the potential Iran deal. Really interesting. And Guy, you pointed out that the Kospi kind of rallied hard. At one point this morning it was up 8%. Now it's up just a mere 5%. There was a story around some of the banks out there. This is a Bloomberg story talking about the banks in terms of reducing some of the leverage that they want to be providing to hedge funds that have exposure to some of those chip names in Korea. So that seems to be a factor there. The bottom line is that you're seeing a rally across equities. You're seeing treasuries relatively stable. The dollar is pretty stable, and oil is down. So it seems to be we're setting ourselves up. The Kospi is back to close to near record highs at this point. European futures pointing hard by 1.7%. And, of course, a lot of strength in the US session yesterday, led by the semiconductor space and the chip names. Once again, double-digit gains for some of those names.
Are we feeling cynical this morning, or are we not feeling cynical this morning?
It's Friday. Does that change the answer to that question?
I think it probably increases my cynicism. We're going into SpaceX. Let's tie this all together. SpaceX IPO is about to happen. Really strong inflation prints, CPI then PPI. Market starts to get nervous. Yields start to move higher. Market begins to roll over. Big IPO coming.
Big birthday celebration.
Big birthday. UFC fighting about to happen.
The stars have aligned.
Do we want the stars have been made to align? Do we want to make sure that we have a pop into the weekend? I don't know. There's a lot of people out there that would suggest that.
One of those giant leaps.
I couldn't. Yes. Okay, let's talk to you about what is coming up on the show. We're going to be talking about what business wants out of the G7. Fabrice Lesachet, MEDEF's vice president, is going to be joining us in Paris. Max Kettner is going to be here. How bullish is he feeling this morning? Alexander Koch, a Raiffeisen Group economist, is going to be talking to us about what is happening in Switzerland and the ECB. And Camille de Cossel, BNP Paribas Markets 360, head of developed market rate strategy and economics for Europe, also in on that conversation, Tom.
Let's look ahead to what else we are watching throughout this Friday. EU finance ministers will be meeting in Luxembourg. Canada's Prime Minister, Mark Carney, meets with French President Emmanuel Macron, of course. That is ahead of the G7 Leaders Summit next week. We're watching that for you. And, of course, we'll be on the ground at that event next week at 3 p.m. UK time. We're going to get the University of Michigan sentiment survey, and the ECB's Joachim Nagel speaking in Berlin. A report suggesting that he is pushing or making the case for a further rate hike from the ECB, possibly as soon as July. SpaceX, of course, to debut on the Nasdaq, and some of the early trading suggests that there could be a pop of around 30 to 35%. That's in the shadow markets. That's the indication on SpaceX.
Yeah, interesting that Joachim Nagel has already been speaking this morning, so we've already heard from him, and the suggestion there being that the ECB is ready to hike again in July if necessary. That seems to fit with the narrative that came out after hours from our reporting that suggested that the ECB, sources telling Bloomberg that the ECB is not ruling out moving again in July. But then you wonder, if we do get a signing, if we do get a 60-day ceasefire, does that push that expectation out a little bit? Or not. These things take time to normalise, even if we do get a signing.
I love the fact that we always get this kind of just the finesse on the press conference that Lagarde delivered.
The message you should have taken away.
Yeah, but it's kind of a bit like that, isn't it? If you didn't understand me. This is the message, basically. We can go in July. Why can't she say that in the press conference? I don't know. I do wonder whether or not she just doesn't want to be quite so direct in her communication, but nevertheless, we have the message that July is a live meeting as well. We could have two more. I find the comparison between the Fed and the ECB fascinating at the moment. The ECB doesn't face the same sort of narrative on inflation, but feels that it needs to act act earlier.
And that's why you get some like Jeffrey Yu, who suggested to us that this could be a policy mistake from the ECB if they go with 2 or 3,
or maybe the Fed's making
hikes.
A policy mistake.
Yeah,
by not going early enough.
Nagel's saying this morning we can't look through the shock So there seems to be the thinking over at the ECB right now. 7:09 here in London. Coming up, Switzerland is due to vote this weekend on a controversial proposal to cap the population at 10 million. We will discuss why Swiss executives are so worried. What is this vote all about? We'll get to that analysis later in the programme. Plus, President Trump is set to face off with allies at the G7 summit in France. That's on Monday. We'll break down what's at stake for Ukraine and for the wider European story. Up next, we'll be joined by Camille de Courcelles from BNP Paribas Markets 360. What does the conversation look like around interest rates right now, post the ECB, with all of these lines coming through from ECB policy makers? If you have questions, if you want to get involved in any of these conversations, Friday the 12th of June, we'd love to hear from you. IB plus BBTV Go. That is the function on the Bloomberg terminal. This is Bloomberg.
We just made a great settlement of the war with Iran, and we're going to be subject to finalization of documents. We should get done over the next few days. We'll probably have a signing maybe in Europe.
That was President Trump speaking to reporters in the Oval Office, of course. He added that Vice President J.D. Vance will attend that signing if it materialises. Oil dropped on those comments and is extending declines this morning after President Trump scrapped planned military strikes on the Islamic Republic. For more, let's bring in Bloomberg's Paul Wallace, who's in Dubai for us. So a lot of messaging happening over the last 24 hours. First, the notification that big strikes were coming for a third day, and then the pullback from that as President Trump said that a deal was close. He said before that a deal is close, so we go into another weekend with some level of expectation, I guess, as indicated by an oil price that's below $90.
Hi, Anna. Yes, I think markets are certainly more optimistic now than they were even, at the start of the week. I think in the last 2 weeks, oil markets in particular have felt that a deal is close, and we've seen, Brent dropping now below $90 a barrel, as you just said, from highs of over 125 in late April. It is important to note that Iran is putting out some pushback to Trump's comments. So the foreign ministry said this morning that there hasn't been a deal agreed yet. It didn't sort of totally deny Trump's claim that, a memorandum of understanding is all but done and dusted, but it did say it still needs to make a final decision. So we could still be waiting for a few more days. I'd be a bit surprised if anything happened quickly enough for there to be a signing this weekend. I think next week is more likely. One thing we don't know is where exactly the two sides have shifted, because there were lots of key sticking points. Lebanon was one of them. Of course, Israel is fighting Hezbollah in Lebanon, a key ally of Iran. But there are also others, such as what happens to Iran's stockpile of highly enriched uranium, what happens with Iran's tens of billions of dollars worth of frozen funds. It wants this interim deal that they're talking about with MOU to essentially state that $24 billion of frozen funds will be unfrozen quickly. We just don't know whether the US has shifted on that demand, or whether Iran has, or whether they both have and have decided to meet halfway. So those kinds of details are crucial. I think it's fair to say something seems to have changed for the better in terms of getting a deal. But from what Iran is saying, we're not there yet. There's still a bit of a way to go.
Paul, we will watch with interest. Thank you very much indeed. Bloomberg's Paul Wallace updating us on the situation in the Gulf. Clearly, that takes us to the inflation narrative via oil. On Thursday, the ECB became the first major central bank to raise interest rates since the outbreak of the Iran war. President Christine Lagarde warning that inflation triggered by the conflict is widening beyond just energy.
We are beginning to see a broadening of inflation throughout the economy. And that is obviously in terms of direct effect, but also in terms of indirect effect. Not yet at this point in the front of the second round effects.
President Lagarde speaking yesterday at the press conference. The messaging overnight has maybe taken us a step further forward, i.e. that July is now a live meeting as well. The market was expecting maybe later this year to see the second rate hike coming through from the ECB this year. Camita Corsell is the head of developed market rate strategy and European economics at BNP Paribas Markets 360. And she joins us this morning. Good morning.
Good morning.
Do you think July's live?
It is live, for sure, but we think they will go in September. For them to go in July, we think we need to move to away from the intermediate scenario that Lagarde characterized yesterday to the persistent one. So in other words, you would probably need to have energy prices a lot higher compared to where we are. You would probably need to have a very important shock for the ECB to have to deviate from what they've just told us yesterday. So I think as long as we are in this intermediate scenario where the ECB thinks that it's a very large but not too persistent shock, they will want to remain measured in their response, and so quarterly hikes looks fair.
A policy mistake?
That's interesting. I think Lagarde yesterday really tried to push against that notion when she said that this was not an insurance hike and that it was adequate across all scenarios.
So she's trying to defend against the suggestion that it would be a mistake. Yes.
She's already trying to defend that. But I think if you look at the console, like what Schnabel said last week was very interesting. It feels like she's deviating already a little bit more toward the more extreme scenario. She said that she already characterized the shock as being very large and very persistent. So when you listen to her, you feel that the ECB might already be moving in this direction. So I think some in the Council are more like Lagarde, some are more like Schnabel.
Yes.
But when you see how big the ECB was on the economy yesterday, and Schnabel saying that at the end of the day, it's the strength of the economy that will really say how much tightening needs to be delivered, and that the stronger the economy will be, the more tightening will need to be delivered. Put that plus a very upbeat ECB on growth, you can tell that the risks are definitely skewed towards more than 2 hikes being delivered.
Okay.
Or if we put it a bit more extreme, towards it being a start of a proper tightening cycle.
Okay, and so tie that into what we're seeing or not seeing from the Fed, because US inflation actually running hotter than Eurozone inflation right now, and the economy doing better than the Eurozone right now, and yet the conversation is very different.
The conversation has been very different, but at the same time we are shifting from one government to the next. So I think Powell was certainly did not want to lean the Fed in a certain direction before the new government take place. So next week will be very interesting in that regard, because Warsh will really set the scene, and it's particularly relevant in a market which for a very long time has been convinced that Warsh would arrive and deliver cuts. So we think the Fed will already move to a symmetric bias next week. And so if he leans in a slightly more hawkish direction, we think that the market could start to price a lot more high.
So your base case is symmetry, so neither hawkish nor dovish?
Correct.
Right, but so if he is a bit hawkish, then that's new. Okay.
So Cami, where is on that view then? Where is the mispricing? Is there mispricing across the Treasury curve that you see right now?
So I would say we see risks on both the front end and the long end. So front end, we certainly see scope for more hikes, but on that we need to listen from Warsh and see what he has to say, confirm the move to a symmetric bias. We expect the Fed will deliver 3 hikes starting from December. So that's not yet fully priced. So we still see risk to the upside at the front end. And then at the long end, I would say, but it's also more broadly across G4. June, we still have a lot of supply that needs to come through, that the market will need to absorb before the summer lull really starts. It's the heaviest month of the year in terms of supply across G4. And yet, term premium have been compressing back to very low levels back at the end of May. So from that regard, we feel that the asymmetry is still skewed to the upside.
So there's a flattening of the yield curve then in that scenario.
Sorry?
Rates up at the front end, less of a sell-off at the back end. What is the shape of the curve in that
I would
scenario?
say we have more conviction on the direction of yields than we have on the curve, especially in the US right now.
Just on that, 3 hikes from the Fed, what's the read across? Can the BOE be on hold if the Fed is hiking 3 times?
So next week, we expect the BOE still to remain on hold, but we expect them to deliver 2 hikes ultimately, and we think the next move will be July for the BOE.
What is a proper rate hiking cycle to you? So 2 from the ECB is not. 3 from the Fed is? Where do you get into the point where actually we get some sort of cyclicality here?
I guess the starting point matters because for some central banks like the BOEs are still in restrictive territory, so you don't need much really to go back to fairly high levels and to a very large degree of restrictiveness. But especially for the ECB, 2 to 3 hikes, I would say for me, would not be seen as a proper tightening cycle.
Okay.
This time next week, we'll have the results of the by-election in England, which usually wouldn't get international investors' attention. Do you think whoever wins that, the risk is more volatility in bond yields?
Yes, to the extent that, again, term premium across the board have been coming off their highs. And in the UK, if we look at our indicator of risk premium, it's back to the lows. So we are at very low levels right now. So if Andy Burnham wins that election, and I think he's leading by 10 points in some latest polls, I think it will put back the focus on fiscal in the UK and the risk around the next governor, whether they will meet the fiscal rules and so forth. So I think there's certainly room for more volatility compared to where we are.
OK, more volatility. We'll brace for that ahead of the politics of the UK next week. Camille de Cossel, BNP Paribas Markets 360's head of developed market rate strategy and European economics. Thank you and have a great weekend.
Friday the 12th, let's talk about what else you need to know this morning. The UK Defence Secretary staying in the UK, John Healey, has resigned in a move that dramatically dents Prime Minister Keir Starmer's authority. Healey, who was seen as a loyal ally of Starmer, quit after a row with the Treasury over defence spending. Starmer is widely expected to face, as we've just been discussing, a leadership challenge from Greater Manchester Mayor Andy Burnham if Burnham triumphs in next week's parliamentary by-election. Infineon is preparing to open a €5 billion semiconductor factory built with the help of EU subsidies. The Power Chip Fab, which opens on July the 2nd, is an extension of the company's campus in Dresden and is the largest single investment. Its largest single investment. The project is a major recipient of funds under the EU Chips Act, which represents a rare success for the bloc's flagship semiconductor law. And the biggest sporting show on earth is now officially underway. Mexico winning the first of a record 104 matches, which is set to be played at this year's FIFA World Cup. The co-hosts defeated South Africa 2-0 in a game that saw 3 players sent off, 3 red cards. Yeah. The expanded 48-team tournament will be played across 39 days in Mexico, Canada and the United States. We had 4 in the last 2 tournaments. 4 the last one, 4 the one before that, red cards. We had 3 last night.
3. So two of the South African players were red carded. So they were left with 9 men, and then one of the Mexican players was red carded towards the end.
So I missed all of this because, as will be a feature of the World Cup, I only watched the first half because it's all too late.
Yes, there is that.
You won't be alone on that.
Highlights. There are going to be highlights watched.
Okay, yeah, that's what I should have done. Should have watched some highlights.
Yeah, amazing. So is that refs getting tighter and tougher, and is that going to be something that we're going to have to deal with throughout the entire tournament?
England are playing Croatia.
Yep.
Ooh. That's been a tough one in the past, hasn't it? Coming up, President Trump set to face off with G7. We'll bring you the latest. This is Bloomberg.
30 minutes to go. This is the picture. We have futures in Europe sharply higher, to be honest, as you can see, pretty much across the piece. Euro Stoxx 50 futures are up by 1.7%. CAC futures are up by 1.6%. FTSE feels like something of a laggard this morning, only up by a mere 0.8%. Stateside, things are looking a little different. We are flat to negative on Wall Street right now. Is that because this is where we were yesterday? We were negative yesterday, but Wall Street was positive. Today, it's the exact reverse. Europe delivered a much more positive open than we thought it would, and you do therefore question maybe the numbers in front of you.
Right, so we need to factor in some of the Iran news. That's what's happening in the stock story, isn't it? And with oil prices continuing to drop, 88.50 is where we trade on the Brent price right now, so that's down another 2%. And so all of that is adding up to a weaker yield story. So we are seeing some buying of bonds. We're decreasingly worried about oil prices and inflation in the Straits of Hormuz, it would seem. So French yields down by 6-7 basis points. Italian yields down by 7 or 8 basis points this morning as we track the latest on Iran. But this is the travelling. We haven't necessarily arrived on that story yet, so we'll wait to see if we get any concrete news flow around the weekend.
Will we get any closer to arrival? And certainly geopolitics will be front and centre as the G7 gets underway. Sources telling Bloomberg that European leaders will use the G7 summit in France to get Donald Trump on board. At least that's the aspiration, with a push for new peace talks between Russia and Ukraine. Global politicians and tech leaders will meet in Evian, France, early next week. Let's bring in Fabrice Lesache, Vice President of MEDEF, the French business lobby group. Fabrice, good morning. What is the business community of France hoping to get from these meetings? To what extent is the business momentum and the business appetite, particularly around CapEx, being held back by the geopolitics, whether it's Ukraine or Iran?
First of all, thanks for having me and thanks for showing me a nice CAC 40 before I start. So, yes, yesterday we gathered with our counterparts from US, Canada, Japan, Italy, Germany and UK. Because it's very important before the G7 that the business community meets and not only meets, but have some proposals on the very topics that we face at corporate level, which are obviously the tariffs, the energy costs, the artificial intelligence disruptions, the environmental transition, all these things that you know very well. But we needed to take a fresh look on it because the international situation, as you know, obviously, is tensed, and also our governments are not always aligned on everything. And it was very important to come up and show that the business community is united. In fact, we want the same thing for 95% of the topics. And this is important. We are raising the flags on the non-tariff barriers and tariff barriers. It's a lose-lose game, and we see the result already in the United States. We see the results everywhere when tariffs and non-tariff barriers are being erected. And so these are the kind of things we discussed and also where we agreed.
What is the current level of anxiety in terms of Iran and the continued closure of the Strait of Hormuz? Are we getting to panic stations on this yet in terms of physical oil on the markets? What are you hearing from the business community about that aspect?
No, it was not a panic mode, but it's a very serious concern. And of course, nobody knows how long it will be and also how deep it can go. And that are the fundamental aspects that we don't masterize. But we have some hedging opportunities, and also the situation is different. Asia is more impacted than Europe, for instance. And within Europe, Italy is more, or Germany is more impacted than France because we have the nuclear energy for electricity. And if you see the spot price on the electricity market in France, it's not the same than Germany and Italy. So, I mean, it's a bit different. And you have lots of corporates that are hedged with multi-year contracts for their supply of gas. So it depends if you are energy intensive industry, if you are hedged or not, in what country you are. So it's not a kind of black or white answer. It's vary deeply, but of course it's some concerns. But it's not new. You have Hormuz today, but the tensions, the global tensions were before. And we have some critical raw material were a big part of the discussion yesterday and before yesterday, because you have the weaponization and you see the restriction on exports from China. And the overcapacity also, where a big part, the overcapacity in China was a big part of the discussion. But this is not only for the G7 countries. The issue is for everyone. If you have overcapacity in China producing in 15 years half of the industrial goods of the world, you will have a problem in Brazil, in Egypt, in Indonesia, in Turkey, in US, in Europe, everywhere. So the imbalances were at the heart of the conversation.
Imbalances are likely to only get worse. That feels like it's the narrative. Barriers are being erected. Supply chains are becoming harder. Fabrice, the only way to deal with this for a bloc like Europe, for the United States, for anywhere, is to deliver supply-side reform. Governments, particularly in Europe, have been very bad at delivering supply-side reform over the last few decades. Do you get any sense that that page is being turned, that there is a sense that actually we need to deliver on Draghi, that we need to deliver on this supply-side story? Do you get any feeling that actually we are, centimetre by centimetre, beginning to make progress in that direction?
You know, you are touching really the sensitive point, because you can say whatever you want about China. You can say there is sometimes real competition, but there is also lots of innovation, hard work behind this trajectory. And we did not do our homeworks properly. And it was also with the US, when we discussed with them, they say, guys, we told you, you cry about tariffs today, but we told you that you have many regulations that for us are problems, are non-tariff barriers, the CS3 triple D, the CSRD, all the CBAM, all the green kind of regulation, the digital tax, and so on and so forth. And also, you have a very complex market, 27 countries, it's a nonsense. Even the UK for the reset is having a very hard time to discuss with the European Union. And we did not do competitiveness, we did not do innovation investment. When you see Draghi, it's not executed, and later as well, the integration of the single market. And this is a problem. Mario Draghi himself explained very clearly, you cry about tariffs in US, but it's 50% inside the European Union for goods, and it's more than 110% for the services, because there are some protectionism, there are also some consumption protection of consumers, there is environmental health regulations that are non-stop coming in, and it's a constant fight to decrease that flow. And Europe is very complex, we all know this, but they cannot cope to simplify it. They try to do it, they do it a little bit, but it's so small. It's not at the speed of corporate life.
Fabrice, your frustration is evident. So these are the things that Europe could do to help itself. What about the transatlantic relationship, Fabrice? The tension between the US and Europe has been very different to earlier years and earlier meetings of the G7. Did that cloud the mood for the business group that met? Do you think it will cloud the mood for the G7 itself?
First of all, US is very important partner for the European Union. You know all the data. I will not recall them here on investment, on trade, and so on and so forth. But US is not the only son of Europe. 80% of our global trade is outside US. Even if US is a big market, 80% of our exports are outside US. That's why we are rushing to sign with Australia, with Mercosur, with India, with United Arab Emirates, with Mexico. And as far as US is concerned, of course, we want to deepen the ties. And I think we constantly had a very productive dialogue with Susan Clark and with the US Chamber of Commerce that are more or less aligned with us. Less barriers in trades, more interconnection. I think the G7 countries have a really important role to play at a time where multilateralism is at stake, because we share, I know that it's common, blah, blah, but at the end of the day, we really share an appetite for freedom, for markets, for rule of law. And this common value creates a state of trust. Of course, maybe the act of some politicians are doing the contrary. But between businesses, we have some trust. And we can build on this, because we see the world the same way. And we face the same challenges, whatever on China or on artificial intelligence. We face the same bets. So we want to work more with the US, and I think the US as well, the business community.
Okay.
And in the media, the narrative is always a bit negative, but honestly, the tone of the discussion was positive.
Okay, Fabrice, we try not to be too negative, but thank you for that update. What the priorities are for the business community, the G7 business community then ahead of that summit next week. Fabrice Lesage, MEDEF Vice President, he touched on AI there. We've been talking a lot, of course, about global tech leaders at the G7. One former UK Chancellor who now works for OpenAI believes some governments are worried they are missing out when it comes to artificial intelligence.
Most governments have a sense of FOMO, we want AI adopted. And at the same time, obviously there are very legitimate policy questions about how AI is going to change the world, what control individual countries have over that technology. So although each country is different and the conversations I have with the various governments are different, there are similarities, and I'm not surprised coming from that world that those are the questions.
Former UK Chancellor George Osborne, who now works for OpenAI as head of country, speaking to me at Founders Forum, the conference yesterday. More on the AI story next. This is Bloomberg.
SpaceX is the biggest rising star of all time.
Anyone that's owning SpaceX, you're buying it for the Musk factor. And many that bet against Tesla and Musk going back a decade ago, that was proven historically wrong.
Elon Musk has appointed himself CEO for life. He has all the voting control. He has basically built a moat with alligators around himself, and that's not good for shareholders.
Feels like a milestone moment. This was an investment thesis that was unthinkable a decade ago for most investors. And I think now people are coming to grips with the fact that space technology is really here. What would have been science fiction to us maybe 10 years ago is now science fact.
Okay, some of our guests giving their take on the SpaceX IPO. What was Dan Ives wearing? We'll talk about that maybe a completely different day. Man's got a strange taste in jackets.
That's his thing.
It is his thing. I know. He's got that pink one, which is anyway. That was a new one on me. Haven't seen that one before. The IPO, of course, is record-setting, $75 billion. It's going to send SpaceX flying up the ranks of the largest public companies when it debuts on the Nasdaq later today. It also puts Elon Musk on the verge of becoming the world's first trillionaire. Joined now by Bloomberg Intelligence analyst Matt Bloxham to talk about this. What's a win today?
Yeah, we talked about this just now, didn't we? I think, 20% plus would be, I think, a big win. Given this is coming to market at a $1.8 trillion valuation, with 100 times trailing sales multiple, I think you could argue that even a small amount of upside is a win. But it looks from like the prediction and futures markets, we could be maybe looking at 35% up, which would be, I think, more than just a win. It would be a kind of a triumph, I think.
That takes us to what, 2.4 trillion?
Yeah, exactly.
Market valuation, if we get that 35%.
Takes Musk to a trillionaire, doesn't it?
It does.
Easily,
He's there, isn't he?
Yeah.
Potentially by the end of today, then. Where have the orders been coming from so far? Retail, institutional?
Yeah, a mix of two. Obviously, I think the standout, and where we had some reporting on this yesterday, that over $100 billion of demand from the retail market, which I think they were talking about 20 to 30% allocation. So there's going to be a lot of disappointed retail investors when they get kind of pared back. So that is probably going to create quite a bit of technical demand. But obviously, institutional orders have been coming in. There was some talk yesterday about a big order from BlackRock, amongst others. So, I think it's come from a lot of different sources.
I'm looking at a suggested question here, Matt, that says, what is SpaceX and Musk's roadmap ahead, which should obviously be flight plan, not roadmap.
Yes.
But so what do we get? What does happen next?
Yeah. Okay. Sticking with the kind of flight plan story, very near term, we're looking for the next test launch for Starship, which is the next generation rocket, which is critical to a huge part of this story.
Ones.
They're really big ones.
And they can carry more satellites.
Yes, 100
and
tons.
Data centers.
Yeah, 100 tons plus of payload versus about 20 tons for the Falcon 9, which is their current workhorse. course. So that could be late June or early July. And so that's going to be the 13th test mission. So that's really critical to show that that's on a good path to becoming a real kind of reusable commercial proposition.
And those become now market events, don't they? Become macro events.
They do, absolutely.
Which is a big change.
It really is, yeah. Beyond that, a lot of talk about what's going to happen with the relationship with Tesla. And I think the expectation is that it's more a question of when is he going to crunch SpaceX and Tesla together rather than if. Now, they're already partnering on TerraFab, which is this chip joint venture. But yeah, I think that's going to be a big discussion point now for the next 6-9 months until it happens, you know.
Okay.
Yeah.
Matt, thank you very much. Matt Bloxham from Bloomberg Intelligence with the latest themes around the SpaceX IPO. So let's turn to the markets in a broader sense in 3 minutes on the opening trade with Markets Live Executive Editor for Asia Markets, Paul Dobson. So, Paul, it's tempting going into the weekend to feel full of cheer. I note that US futures are a little negative, actually, but we've priced the SpaceX IPO, the Iran deal, according to President Trump, at least, is making progress. How do things feel over in Asia?
Yeah, good morning, Anna. Asia had a pretty good session, all things considered, with pretty decent gains across stock markets, across the tech space as well. And I think that, you know, even in the last 24 hours, the negative reaction that we had when Donald Trump was talking about how hard he was going to hit Iran was not really that excessive. The market is a little bit weary of this, but nonetheless, it seems that there's enough for people to hang on to going into the weekend, the prospects of some kind of a peace deal, and so people are taking some optimism and cheer from that again. You know, we know that we've seen this story and we've been through this, you know, plenty of times before. I saw a funny tweet that was saying this has got more endings than the Tolkien's The Return of the King novel. But at some point, you know, we are getting closer to some sort of a resolution. And in any case, more of the energy is coming out of the Gulf and feeding markets. And so with the lower crude oil prices, that does give investors some sense of reassurance.
OK, so we're 88.47 right now on Brent. Does that price a peace deal? Kind of, what does Brent do if we get a deal? Does it go down further from here? Are we in the 70s? Are we in the 60s? Or do we just stay in the 80s?
Yeah, I'd be dubious about prices coming down too far too fast from here. I think that, you know, it's going to take a long time to get all of the energy products flowing again. And I think for the economies around the world and markets as well, it may be too late for us to get an immediate kind of bounce back as well. I feel like certainly in our parts of the world, there's going to be an inflationary impact for longer. There's going to be an impact on the economy and jobs for longer as well. So the bounce back, given we had more than 100 days of this sort of curtailed supplies, is going to be a little bit more tricky than the idea that we can price back in or return to normality right away.
You're in India, Paul. What sense are you getting there? I mean, India has been very vulnerable, of course, to the energy shock. What is the sentiment in that part of the world right now?
Yes, Tom. So I think that across Asia, actually, we've really seen major pushback over the last week or 10 days. There'd been an awful lot of pressure, particularly on currency markets, for the energy importers right across the region. We've seen different approaches. So, for example, in Indonesia, they're more determined to use interest rates to stabilize the currency. Here in India, they've gone a different route. They're trying to lure in a large amount of foreign inflows, leveraged up in order to boost the rupee by sucking in cash from abroad. And that seems to have gained a lot of favor, at least with the domestic market, where people are welcoming this as the RBI getting to grips with things and also not using interest rates, which might not be the best strategy for India, but finding a different route in order to stabilize the currency.
OK, Bloomberg Markets Live, Executive Editor for Asia Markets, Paul Dobson. Paul, thank you for that take on these markets. Let's get your individual stocks to watch now with Alex Morgan this Friday. Alex, what are you watching?
Thank you, Tom. Yep, happy Friday, folks. Let's start with Infineon, diving into the news here that they are looking to open their largest single investment, $5 billion chip plant, extension of their Dresden campus. All of this, of course, as demand for those power chips in Europe surges. Major recipient of EU chip funds. Year to date, you can see really more than doubling their stock value, keeping an eye on Infineon there. Let's turn over the board then and look, keeping on the theme of AI, with energy. And Siemens saying that they are, well, a quote from the CEO saying that customers in Europe are now so interested, so needing the gas turbines, they're willing to pay reservation fees. That is a practice that started in the United States, has expanded now to Europe. You can see they're up around 22% year to date. And because it's Friday, let's, now have something completely different, turn to luxury yachts. We're looking here at news that Ferretti is looking to purchase its troubled rival, the Italian Sea Group. You can see here two very different journeys, choppy seas for the Italian Sea Group. Broadly speaking, though, these discussions are said to be at an early stage. There are headwinds for the global yachting industry. There's been the geopolitical tensions and also a slowdown in the ultra-wealthy purchasing these yachts after many boom years. We'll be keeping an eye on whether there's any uptick for the Italian Sea Group this morning when trading gets underway very shortly.
Alex, thank you. Not enough luxury yachting on this programme, I think we take away from that. Alex Morgan with the stocks that we will be watching. Broadly then, it's a catch-up story, isn't it, for European stocks, catching up with the trading day on Wall Street and in Asia. The Iran lines, despite everybody having travelled this journey before, the Iran lines do seem as if they're going to have something of an impact because they're impacting, to some degree, oil prices. Yeah,
oil prices are down quite sharply.
Bond yields are down.
That does have an impact. Bond yields are down. You kind of extend that. You can price equities at a more favourable rating.
Yeah, so banks, financial services in focus on the yield story. We've got the oil majors in focus on lower oil prices. Interestingly, gold and silver broke down in the session as well, so we can watch miners and then some of those individual names. Interesting, Novo Nordisk apparently has been given some approval from the UK for Wegovy, so that stock could be a stock to watch as well.
on the newer pill form. Just for completeness, though, we'll mention that E-minis and Nasdaq futures are weaker. So we'll see how long it lasts, but we're down by 0.4% on Nasdaq futures right now. Coming up, though, that's for later. What is coming up is the opening trade here in Europe, which does look positive. Futures pointing decidedly to the upside, very much in the green. We'll be back with the market open for this Friday, the 12th of June. Stay with us, everybody. This is Bloomberg.
Friday morning, good morning. You want to know why Europe is ticking higher, why Tom's about to show you a sea of green? Let me show you this chart before we get to Tom. We went out there, US went up there, we finished up there, and that is why Tom has a futures picture that looks like it does this morning.
Yes, bright green, to your point. Relative underperformance for the FTSE 100, but still called higher by 0.7% here in the UK. Across the benchmark, we're looking at a very strong session then, called higher by 1.4% on the European Stocks 50 futures. Two main catalysts. It's the potential, again, of that Iran deal, but it's also the fact we've cleared the hurdle on the SpaceX IPO, which will, of course, start trading later today in the US. DAX futures called higher by 328 points. We are set for a very strong European equity session, Anna.
We are. Not so for energy stocks, perhaps. I'm mindful of the fact that energy was the best performing sector yesterday, and we have oil prices now down by 2%, so we'll watch for some weakness there. What else are we watching? We're watching Infineon. This is an interesting story. The technology business preparing to open its largest single investment, a €5 billion semiconductor factory. This is part of the EU's push to boost chip production, to try and be more resilient on that front. We're watching Flutter as well. They have announced, is this a surprise? Maybe we saw this coming. They're delisting their ordinary shares from the London Stock Exchange. That's effective August the 3rd, but they're keeping their listing in the United States. That was a new development in the last couple of years or so. And we're watching the yacht maker. We said earlier on there's not enough luxury yachts on the programme, so let's have another pass at this story. Ferretti weighing an offer to purchase all or part of the troubled rival called the Italian Sea Group. So that's seen as strengthening Ferretti's position in its home country. Guy?
I agree. More luxury yachts. OK, let's talk about this market open. Europe is expected to do well. London's going to underperform. Oil prices are going to be a factor, but broadly we're expected to go higher at an index level. That's going to be the narrative. It's basically a legacy story from yesterday out of the United States. But look at what is happening on Wall Street right now, and you see a more negative picture. So how far do we actually go? Because yesterday we thought we were going to be quite negative, but US futures were higher. So actually, we ended up with a positive open. FTSE's up by 0.4%. We're expected to be 0.7% to the upside. Oil's going to be a drag there. Stock 600, we haven't got a full picture yet. Let's see how the CAC opens this morning. It's expected to open fairly strongly. The DAX, obviously very exposed to the energy story. It's expected to be fairly positive. CAC's up by 1.4. IBEX is up by 1.7. AEX is only up by 0.6%, which I think is interesting as well. We'll wait for the Germans. They'll be along in a minute, Tom.
They will indeed. They will indeed. Top of your list across the sectors right now. Banks. So you've got the bond story, of course. Bonds are rallying, yields are down. Tie that to oil. Travel and leisure gaining as well. That is not unexpected given the optimism around the Iran story with oil prices lower. So travel and leisure amongst the top gainers. 2.4% right now for that sector. Similar picture for banks. Basic resources also rallying hard. Every single sector bar essentially three in positive territory. It is energy that is the biggest loser right now. And again, that is fully expected. Currently down that sector 2.6%. What are some of the individual names that stand out to you, Anna?
Within the travel and leisure space, it is those airlines that are moving higher. So they like the lower oil price. 88.55 is where we are on Brent, and Ryanair is up by 4.6%. So that's a sector that we're certainly not surprised to see on the move. And you were talking about the energy space as well, Tom. Banks doing pretty well, up by 2.4%. There we've got SocGen up by more than 4%, Banco Santander up by 3.6%. The bond story is interesting. We're down 5-6 basis points on the 10-year yields on some of these parts of the European government bond space. So that's something that's in focus. And basic resources you've mentioned, I think, but that is also doing pretty well this morning as a sector.
Energy's lower. Total, Shell, BP, Eni, Equinor. Points losses, that's the top five. So basically it's the energy sector that is adding as a drag, but you've got 454 stocks, 455 stocks up, 90 are down.
Yep.
So there's a definite bias to the upside.
That tells you about the bias this morning. Let's talk to Max Kettner, Chief Multi-Asset Strategist over at HSBC. And a pleasure to speak to you this Friday, Max. So last time we spoke to you, you were extremely positive about stocks. Are you even more positive about stocks?
Well, I can't be more bullish because I've already was maximum bullish. So, obviously, days like the last 5-6 trading sessions, I'm sort of itching to put out a note that says buy the dip, but I have no money left to buy the dip. So it's a bit... But I think we are probably in an environment again in the last 2 weeks where the narrative has shifted a little bit, where particularly sentiment has taken a hit. We see that in survey-based sentiment, right? Survey-based sentiment hasn't got really stretched in the last 3-4 weeks, but it's gone a little bit above average. Just the last week of setback was enough to just make that pop down again, right? So we see across most of the big surveys, particularly also among retail, that actually, survey-based sentiment has deteriorated quite a lot once again. That's pretty good. And I genuinely think, we've got all the macro guys now being worried about IPOs. So we have loads of IPO experts now. I suspect we're going to be experts on something else this time next week. And then we're all worried about Kevin Warsh being super hawkish next week. I suspect that the Fed is going to be super boring compared to what we've priced and how much the pricing has shifted over the last 5.5 weeks. If you get a sort of boring-ish Fed next week, plus the IPO today actually going well, I think, honestly, I'm going to invite myself back to this time next week, because that's what I do. And sadly, then we'll probably be a couple % higher and be like, shoot, that was the dip that I should have bought.
Seems to be max long leveraged. 2 times max. That's the way we go.
Is there an ETF for that? Is what I wonder. We need to. Maybe somebody wants to channel you into an ETF, Max. I think that would be to somebody's advantage. What about? So do you think the market then, on the other side of digesting SpaceX, will it look more positive? Is that part of? I
don't think it's actually about digesting. So we talk so much about what's this equity supply going to do, and it's totally different from the 2010s, and it's going to bring the share count up and all this. I think we forget about a couple of things. Number one, when you look at, who's going to buy all this? Look at just ETFs. Just look at the passive space in the US. And just in the US, we've raked in almost already $400 billion of inflows, right? So when we say, how's that going to be absorbed? I mean, we're talking about 75 billion supply today, and we have 80 billion inflows into passive per month, right? That's already something where I'm like, look,
it's digested.
Why are we talking about
Is that inflows from cash? Or okay.
I think it's mostly from cash. I think it's also a lot of times we are underestimating, I think, particularly in the US, the wealth effect, right? We talk so much about, I'm sure you guys were talking about it at some point in the last couple of weeks, about how the savings rate has gone down. That's entirely wrong. That's a flow variable, right? That's how much they're saving from income. the US being so K-shaped is no longer that susceptible actually to changes in income. It is much more driven by the higher end of the K, right? We know these things. Like Moody's had that paper, which I get it, the methodology was maybe a little bit off, but it is, they said the top 10% are driving 50% of consumption. It's probably a bit much, but at least you can say the lower 20%, you're driving something like 5-6% of consumption. It just doesn't really matter that much. Whereas the wealth effect matters. Look at last year. The household wealth effect, the change in US household wealth was $1.6 trillion. That's almost the entire fiscal deficit this year.
So what happens if you get a 10% drawdown, 20% drawdown?
I think it depends. Obviously, I'm going to say it depends because that's what strategists do. It depends whether you get a 20% drawdown and you stick there, right? So let's say, if you get a 20% drawdown because of tech and AI and suddenly no V, right? Nothing like we had this year or with Liberation Day, I think then you have an issue. And to be honest, I think there's no coincidence that in 2022, when we did have that, and the buy the dips were shallower than the previous highs, we did have negative wealth effects, and that did lead to lower consumption quite quickly, right? The issue is, are we going to have that? Are we really going to have 20% down in equities? We're sticking down there, and the Fed says, oh, by the way, no Fed put. Let's say next week, what's the incentive for Kevin Warsh to say, I am even more hawkish than my predecessor because, you know what, until there's a 2.0 on CPI, I am not going to yield. Why? You look at this, I mean, you know what, 6 weeks ago, front end, if you look 1 year ahead, was pricing -20. We've come off now a bit, right, with what's happened on oil. But you've moved from -20 to +30. Yeah, sure. Right? That's probably enough. I don't need to fuel that fire.
All the chips feel like they're in the middle of the table right now. Everybody's gone max long.
Really?
So, okay.
Do we think that? I mean,
that's the question I'm asking, really, is what juice is the next bit? Where does this...
I don't think positioning is that long. You look at least our stuff, systematic, CTA, risk parity, vol target, momentum signals. All of that is like 50th percentile. Again, survey-based sentiment. It took a tiny bit of a drop. I mean, we're 2.5% off the all-time highs in the S&P. And if you look at things like AAII, maybe you guys can show it afterwards, like AAII, if you look at the bull-bear spread, it's almost as low as it was in the doldrums of 2022, right? So it's not like everyone's super long, right? We've seen that even in our sort of aggregate, systematic, and discretionary indicators. It's neither really
Let me ask
here
that question in a slightly different way then. What is the catalyst to get the market going higher from here?
I don't think there needs to be a catalyst because we're in an environment where inflation structurally, particularly in the US, is higher. What that means is your revenues, and I'm talking more structural now, right? Not the next 3 months. What that means is you're in a structurally higher nominal growth world. You're in a structurally higher revenue growth world. If your margins don't change, your earnings are perpetually growing faster. You're on a, you know what I mean? Like you're
perpetually.
Yeah, slightly dangerous there. I'm putting myself in slightly dangerous territory. But, at least for now, shall we say it like that, that means you're in a structurally higher growth trend. What that means to me is if you want to go neutral equities, right, or neutral risk assets overall, it probably is not if you're between 1 and 10, it's not a 5. It's a 6. You have to be always slightly overweight because it costs you so much to shift into cash, right? So I think it needs to have a catalyst to be properly bearish. But to be bullish, honestly, just an absence of bearish catalyst is probably enough.
Max, what's your bullish sentiment around Europe? A high rate environment, low growth environment. Where does Europe sit in your thesis right now?
Tough. Really tough. I mean, when I say I'm max long, I'm really long the wings, right? I'm long the US and Asia, and I'm sort of ignoring Europe at the moment because the problem is in Europe is we need Iran to go away, right?
We need the Middle East
to go away.
Why not position for that now? Get the upside on travel. Travel and leisure's soaring today.
I think those are the sorts of things you can do.
You missed that rally.
I think those are the sorts of things that you can do, right? But again, the problem is you're making if you buy European travel and leisure, you're basically making a call on one thing. Right? On one thing around geopolitics. If I buy Asia, if I buy Japan, I still have sensitivity to the Middle East conflict, hopefully receding in the next couple of weeks or months, right? But I have the domestic fiscal story. I have the AI story, right? More AI exposure. I've got the defense names in there, right? I've got the currency story there. I've got loads of other drivers as well. If I buy things like Taiwan and Korea, I've got the AI story, the tech story. I also have a potential beta a little bit from, Hormuz is reopening, Middle East conflict hopefully is receding soon. Yeah. But it's not just a call on this one factor like you have in Europe right now.
For strategists, cross-asset strategists, Max, it certainly dawned on me this morning that we have to start watching SpaceX launches from a different perspective. It's not just sort of new science. This is now market-relevant information. Do these launches, we're going to see, many by the end of the year, I'm sure. But does that start to become a new thing that the markets have to keep an eye on?
I don't know. I think the
because
single
without
launches,
them, we don't necessarily get all the energy we need for this AI build-out.
Yeah, I think the single launches, no. I think what we'll be probably more interested, particularly around the space economics, is how much do the costs really come down? Mm-hmm. Month after month or quarter after quarter, how much do the costs come down? Because that can then really justify some of those valuations, which now do seem lofty, right? But if you're saying price to sales, if you take those measures at current sales, it doesn't really make sense, right? If you say, hey, you know what, my costs are coming down so dramatically over the next couple of years. So I don't think it's the single launches. It's probably more is that cost or the efficiency gains there, do they really come true? It's what we're seeing also in AI and the chip usage, right? That is maybe a downside risk. Google wrote a paper called Turbo Quant about 2.5 months ago, where they're saying we found a new method that could reduce chip usage by 6 times, that could increase efficiency by 8 times. If you do it, if you do have that may at some point call the memory trade a bit in question, right? But it's more the aggregate things that we need to take into account, and particularly the aggregate efficiency gains.
Max Kettner, 2 times leveraged. HSBC's Chief Multi-Asset Strategist. Thank you very much indeed. Core 6 looks like this. Let me show you some numbers, give you an idea of what is going on. As you can see, there's only one stock in negative territory. Defence names are under a little bit of pressure this morning. Chips are up. We are seeing energy names coming a little softer this morning, but we are in a very buoyant mood this morning here in Europe. Let's get more. Actually, let's start with the negativity and then we'll get back to the positivity. Alex wants to start with oil majors.
A wonderful introduction there. Yeah, I'll start with the negativity when we're coming to what's on the move this morning. In the red, the oil majors. Now, of course, we had that slump in the oil price. Brent trimming some of those losses now, but that was after Donald Trump talking up the possibility of a peace deal with Iran and calling off those strikes. We can see here Total down around 3%. You've got BP as well down around 3%. So red across there for some of the oil majors this morning. Turning that board over, though, to look at where that's putting things into the green. We're looking at airlines and travel. They are very much in the green this morning off the back of that slight dip in the price of oil. We're seeing Ryanair up there around 6% as well. You've got TUI at the bottom there, 2%. IAG, of course, operator of British Airways, up around 4%. Let's turn then to Infineon. Of course, we're talking about their single biggest investment, this $5 billion power chip fabrication plant they're extending in Dresden. They're up around 1% this morning. Of course, AI very much in the news, dominating the news today. And given we've been talking about how important it is to have more yachts on the programme, let's look at Siemens first very quickly there. They were in the news this morning talking up the gas turbine demand. European customers are very much wanting those, up around 3% this morning. Now let's bring in the yachts, getting excited by the yachts. Here we go. Looking at Ferretti, they, of course, were eyeing a potential part or entire takeover of the troubled rival, the Italian C Group. We can see Ferretti up around 2% this morning, Italian C Group down around 3%. Now, we talked about the global headwinds facing the yachting industry. It can be interesting to see where that goes. And finally, there's been, we're turning to French miners, the French miner Emirates. Now, they are in the green this morning. There's news that a consortium is approaching them with the potential view to take over a share there. So they're up around 6% this morning. So from AI to yachts to mining, a bit of a mix for you there. Those are on the move out of the gate this morning.
OK, Alex Morgan on some of the stocks on the move this Friday. Thank you. Coming up, Switzerland faces a knife-edge vote on whether to cap its population. Alexander Koch from Raiffeisen Group joins us next. This is Bloomberg.
Welcome back. This is the opening trade. Looking back to Wall Street yesterday, we saw green on the screen. Stocks were higher. That on the back of a weaker oil price because of what President Trump had been saying about the Middle East. So we see that replicated here in Europe with travel and leisure stocks going higher, energy stocks on the downside. But Guy, US futures actually worsening. Nasdaq futures down by 0.6% right now.
How long does this last is the question. OK, let's talk about what's happening this weekend in Switzerland. The country is going to vote on a proposal to cap the Swiss population at 10 million. We're not at 10 million yet, but we're getting there. The Swiss People's Party argue it's a solution to housing affordability and so many other issues that the country feels like it's facing right now. Critics say the move would threaten investment and growth. To discuss what is at stake, let's bring in Alexander Koch, macro and fixed income research head at Raiffeisen Group. Good morning, Alexander. How important is this weekend for the future of the Swiss economy?
Yeah, good morning. So, of course, it's a unique and important vote. Switzerland is a direct democracy, and popular votes, they are not really special. We have 4 times a year usually votes on different topics, and we had votes on immigration on a regular basis in the past, but the unique thing about the upcoming vote is that they want to cap the size of the population with a binding cap of 10 million, and this of course can affect the economy negatively in various ways in the long term.
The Swiss economy is not growing that quickly. Like, it's growing, but it's not growing that quickly. If you were to limit immigration, is it possible to quantify what that growth rate would be if you were to remove that driver that we've seen pushing the number incrementally a little bit higher over the last few years?
Yeah, so you can do an approximation. We had population or immigration growth, driven population growth over the last years of about 0.8% per year. And this, of course, pushes incomes and consumption and growth overall, also employment. Therefore, if you have a absolute standstill of population and immigration growth, you can translate it maybe even one-to-one in the impact on growth. So we would have much lower growth, much more close to the already ailing economies, neighboring economies, because if you compare actual productivity growth, you don't have such a big advantage in Switzerland.
Alexander, not a lot of countries have the direct democracy in action that we see in Switzerland, but a lot of countries have seen immigration drift to the top of their domestic agendas, or at least somewhere near it. And I wonder where this goes next in the Swiss case. Does technology feature as part of this conversation? Might we see an interesting experiment if this is approved, this change, in asking what AI can do in place of more headcount? Is that part of the narrative in Switzerland?
Yeah, indirectly that's the case, because if the initiative is approved, so directly, immediately there will happen nothing. But the government is then asked to think about measures to dampen the need for immigration and also immigration directly over the coming years in order to prevent the size of the population to reach the cap. And therefore, of course, like in the past, they should at first concentrate on soft measures like increasing the retirement age and also trying to bring more women into the workspace, so higher participation of women, which is, however, already high in Switzerland. And of course, also productivity enhancing measures with more capital investment, and also the use of AI can in certain sectors definitely in the coming years and decades help to reduce the need for more employment.
Okay, Alexander, so those are some of the measures that you might advocate instead of necessarily a population cap. There are some real issues here that the population have been debating around housing and around infrastructure. What specifically would you advocate to address the pressures on housing, the pressures on infrastructure?
Yeah, we have similar pressures as in many other countries, and it's very high on the top of the list in household service. So the initiative really hits a nerve here. And we have already some action plans in order to increase the production of new homes, but it's also similar to other countries that you have the sense of not in my backyard. You have very high increasing regulation, ever higher building costs, so it's a long and difficult way in order to increase the production and the supply of housing here.
If the population cap was to come into force, what would that mean, do you think, for Switzerland's relationship with Europe, particularly when it comes to free movement of people? How much of that is a concern amongst the business community there?
Yeah, it's in the long term, it's a big concern. So, as I said before, so immediately nothing will change, and they have time to prepare, implement measures. You know, currently the population size is 9.1 million, so we have still a long way to go. At the current rate of net immigration, it will take until the end of the next decade until we reach at the earliest point in time the cap, and therefore we have much time. But if we reach it, they are required to terminate international agreements, maybe also the agreement with the EU of free movement of persons, and this is very a big integral part of the treaties with the EU, and it could put further strain on relations already in the shorter term, because currently a new framework of treaties is discussed, and with this topic in the spotlight, it gets more difficult to reach conclusions.
Alexander, thanks for the update. It's going to be fascinating to watch. We'll work this one out again on Monday. Alexander Koch, Raiffeisen Group, Head of Macro and Fixed Income Research. That's it. We're done. Breakfast?
Yes, excellent idea. Tom has another half hour because of the tech show. But we have time to think about the weekend ahead of that.
What's the match? So Brazil are playing.
Yes, Brazil-Morocco.
So Brazil-Morocco, that should be good. That's tomorrow.
It's late. Brazil is a sea of yellow at the moment, as everybody gets ready for the World Cup.
You were there a couple of days ago.
Yeah, definitely.
Yes, of course.
Harry Styles?
Right, yes, that's Wembley, yes.
Anna's desperately pretending that she hasn't logged this one and she's not going.
Yes, that's at Wembley. I was trying to make the football connection, but I was too slow. But yes, that's happening. There's a Grand Prix, there's Le Mans, there's an NBA Finals, there's
Game 5, that's Sunday, isn't it?
There's a lot of sport.
So, yeah, Spurs are going to make a comeback. Yeah. I don't know. Could be a massive weekend for New York. Like Monday morning, New York.
Isn't there some fighting going on in the US? Is that what's happening on Sunday? Is that UFC?
You're talking about regulated fights, right?
Regulated, yes.
People arguing with each other.
Yeah. Regulated fights. Before we get to that, there's a battle going on, talking of fights, around AI. London is quite well placed, and we have a show on that coming up on Bloomberg Tech just in the next couple of minutes. London Tech is on a tear. Britain leading the AI wave in Europe. Yes, that is demonstrably true. So what is behind the explosive growth? How does it position the UK? I'll dive into that